Hello and welcome to Investlo, your channel for qualitative stock analysis. My name is Niklas. Today we'll be looking at Meta Platforms, commonly known as Facebook. The company recently reported earnings and crashed a ridiculous 25%, losing around 200 billion in market cap after a lot of people thought the earnings were below expectations. The company currently faces a lot of new headwinds and is trying a lot of new things. The question is this purely innovation, or are they just trying to get back into the growth, into their old growth? So let's find out if Facebook could be a good investment right now. Meta Platforms, formerly known as Facebook, currently under the ticker symbol FB, but soon switching to the symbol Meta, has a market cap of around $900 billion. They currently employ around 58,000 employees. They were founded in 2004 and rebranded as Meta Platforms last year. They are headquartered in Menlo Park and are mainly in the sector of social media. The CEO and founder is Mark Zuckerberg. If we take a look at the share price for Facebook, we can see that it was a pretty good story for the last few years, but then with the last earnings we can see a pretty big crash all the way from the 280 levels down to the 200 levels for the stock. Let's take a look at the ownership structure for Meta. In the institutional ownership structure, we don't really see anything interesting, just the normal Vanguard, BlackRock, and Capital Research Management investors. But outside of this, there is Mark Zuckerberg, the founder and CEO, who owns around 16% of the company, and with that is worth around $80 billion at the age of 37. If we take a look at the analyst ratings, we can see that analysts are mostly positive. One of them has a reduced rating, 10 of them have a hold rating, 9 have an overweight, and an astounding 33 have a buy rating. The lowest target here has a downside potential of 7%, with the highest price target having an upside potential of 96%. Let's take a look at the different business segments for Meta. Facebook is the biggest segment for Meta, having an astounding 2.9 billion monthly active users and 1.9 billion daily active users. For years, people have driven the narrative that Facebook is losing members and that people just don't want to be on Facebook anymore. But in the numbers, you really can't see that. For the last decade, pretty much, it was pretty much a straight line upwards, with Facebook adding new daily active and monthly active users every single quarter. This stopped this quarter though. Facebook, for the first time in its history, lost monthly active users, even though it was only 1 million, and only gained 2 million of new daily active users. So the question is, did Facebook reach its peak, or is this just a little stop in the growth runway? Also worth mentioning is that Facebook is not just the normal Facebook website, the social media. Facebook also has the Facebook Marketplace and the Facebook Messenger. Especially the Facebook Messenger is interesting because it is one of the most commonly used messengers in the world. It may not be monetized, but it still keeps people drawn into the ecosystem. Another big business segment for Meta is Instagram. Instagram was acquired around 10 years ago for only $1 billion back then. Since then, it has grown into one of the biggest social networks on the planet, just behind Facebook and maybe TikTok. They currently have around 2 billion monthly active users, but Facebook doesn't report the exact numbers every quarter. With Instagram Shops, they recently went into e-commerce so that people on Instagram can put up shops and directly sell their products there. Another big business segment for Facebook is WhatsApp. WhatsApp was acquired for $16 billion and is one of the largest messaging services in the world. Like with Instagram, Facebook doesn't on a quarterly basis reveal the user numbers. The most recent user number we have is on February 20, where they reported around 2 billion monthly active users. WhatsApp offers a lot of different services, like the textbook messaging, the group chat ability. You can send data and receive data. You can call people, you can do video chats. And what's most interesting for the future, will be pay. Currently, WhatsApp is not monetized, but if they can implement the pay feature well, it could, in theory, develop into something like WeChat Pay and become a gigantic fintech business. According to StatCounter, Facebook has an astonishing 75% in the social media business. This doesn't even include other businesses from the Meta group like Instagram, which also has around 5% of the market share. One untapped business segment Meta could get into, which I also previously teased already, is payments. With WhatsApp Pay, they are already testing this in some countries like Brazil and India and have seen some first successes. There are also already hints of implementing this into the WhatsApp code, so it could soon be available globally. The other payment venture they have is Novi, which is Facebook's digital wallet, which will allow transactions to be made easily, securely, and quickly without these via WhatsApp. This is currently available in the US and limited in Guatemala. Meta is the leader in the VR AR market with their Oculus brand, which they acquired for around 2 billion in 2014. We can see a pattern here of Facebook acquiring smaller businesses and growing them into large parts of their business. The global virtual reality market was valued at around 15.8 billion in 2020 and is expected to grow at an astounding compound annual growth rate of 18% for the next 7 years. With the VR AR technology, you could revolutionize gaming and office use cases, also concerts. You can modernize conferences and also do training sessions for different fields. As we can see, Oculus currently holds over 50% of the market share and is especially successful with their Oculus Quest product. Recently, Meta renamed the Oculus Quest though into MetaQuest. Meta is also developing their own supercomputer, which is said to be the world's fastest super AI computer once it's finished. The mainframe is expected to have a theoretical computing power of almost 5 exaflops when the second construction phase is completed by mid-2022. Among other things, it is said that the system should enable real-time translation to allow larger groups of people to converse in different languages. This is especially interesting if you think about the around 3 billion people from all around the world that are currently on their social media platforms. Fully expanded by mid-22, it will connect over 16,000 graphic processors supplied by NVIDIA. Meta recently created a new buzz hype word with the term Metaverse when they announced that they will rebrand the company to Meta Platforms. Nowadays we can hear all different kinds of CEOs from technology companies like Microsoft or Google, but even CEOs from companies like Nike or Disney talking about the Metaverse and how they want to attack the Metaverse and get new business segments into this space. The global Metaverse market was valued at around 50 billion in 2020 and is expected to reach over 800 billion by 2028, which would be a compound annual growth rate of over 40%, which is just ridiculous. Meta aims to have over 1 billion users in its own Metaverse ecosystem by 2030. The Metaverse itself is going to be a VR AR powered social media, or pretty much a decentralized space where people can meet and do all different kinds of stuff they can do in the real world. Let's look at some recent news. Facebook was working on a crypto project called Diem, which they recently abandoned and sold to the Californian bank Silvergate for a total of $182 million. A judge recently allowed the antitrust lawsuit against Facebook to proceed. Facebook is accused of unlawfully suppressing competition by acquiring potential competitors, such as messaging service WhatsApp and photo sharing app Instagram. This is especially funny because the same institutions that are now filing a lawsuit against Facebook initially told them that the deal is okay and let them continue with it. Last year, Apple introduced the so-called app tracking transparency with iOS 14.5. This will allow users to first be asked whether or not they want to be tracked across apps. So you can imagine if somebody opens Facebook for the first time and is asked, do you want this app to track you? Most people will probably press no. This severely hinders the personalized ad system of Facebook. And recently, the chief financial officer of Facebook gave exact figures for the first time and said that the impact of the iOS change in 2022 will amount to around 10 billion of missed revenue for Facebook. Before I continue to talk about the numbers, I would kindly ask you to thumbs up the video and subscribe. I would also appreciate if you could ask some questions in the comments or comment if you maybe own some Facebook shares or Meta shares nowadays and what you generally think about the company. Also, this is only my fourth video, so I would appreciate any feedback or criticism you have about my videos. Thanks. If we take a look at the last full year numbers, we can see that Facebook had a revenue growth of 37%, up to 118 billion. The net income grew 35% to almost 40 billion. The gross profit was a increase of 43% all the way to almost 47 billion. The EBIT was around 95 billion, which means a 37% increase. The equity got reduced a bit, but still floats around the 125 billion range. The equity rate went up though, with around 8.8 percent points. And the return on equity stayed on an insanely high level of 75%. So we can see that Facebook was growing very rapidly in this reporting period and that they are an insanely profitable company with insanely good capital allocation. Let's take a look at the last earnings report, which had the stock crashing around 25%. We can see that total revenues decelerated and only grew around 20% compared to the last Q4. We can also see that in the meantime, costs and expenses increased 38%. This lost to a decrease in earnings and net income for around 8% and a decrease in earnings per share of 5%. So these numbers don't look amazing, but they also aren't too bad in my opinion, and especially the increased costs and expenses were told from the management in previous quarters with the whole restructuring and enabling the development of the metaverse. So I don't really understand why the stock crashed as hard, but yeah, that's Wall Street for you. If we take a look at the valuation, we can see that all metrics are much below their 5-year average. The PE ratio currently is at 17. The price to sales ratio is a little bit under 6. The price to book ratio is at 5.5. The price to cash flow ratio is a little under 12. The PEG ratio is at a very good 0.5%. And the Piotrowski F-score is on its average of 6 out of 9. If we take a look at the last 5 years, we can see that revenues grew a strong 189% from around 40 billion to almost 120 billion. In the same time, the net income increased a good 150% from almost 16 billion to almost 40 billion. We can also see though that revenue increased faster than net income. So the business is scaling, but margins are still compressing a little bit, which investors should take an eye out for. If we take a look at their revenue distribution, we can see that pretty much all revenue currently comes from ads. There are other segments like the virtual reality headsets are not really contributing anything right now to revenue. This also leaves some huge potential for the future though to become a diversified business with many different revenue streams. If we take a look at the debt situation for Facebook, we can see that they have a net cash position of 62 billion and no long-term debt, so the financial debt looks splendid. Their debt to equity ratio is a very low 33%, with equity of around 125 billion and liabilities of only 40 billion. So these values look absolutely stellar. If we take a look at the guidance for the next few years, we can see that analysts expect Facebook to keep growing their revenue. Their profits, though, on the other hand, are not really expected to grow much. The net income is only expected to grow around 1.2 billion in the next 2 years, which would also mean that the net income margin would decrease from 34% to 25%. These are still strong margins, and we will have to see if the whole investment in the metaverse eventually pays off. But for now, it's a an elevated risk level compared to the Facebook of half a year ago. So let's summarize Facebook or Meta platforms. They have a monopoly-like market position in a lot of different segments like social media and virtual and augmented reality. They are the biggest network in the world with a family of over 3 billion monthly active users. They have a very strong balance sheet with a large net cash position and no real debt. They have a promising portfolio with social media companies, hardware, and also payments potentially. On the other hand, though, there are a lot of political risks because Facebook is probably one of the most hated companies on the planet, and there are pretty much always multi-billion dollar lawsuits against them, and politicians trying to split them up and things like that. In light of that, they are also frequently criticized and are facing many challenges currently, like the potentially stagnating user growth on Facebook and the whole restructuring into a metaverse company. If we take a look at the mode of Facebook, we gave the network effect a perfect score because Facebook pretty much is the definition of a network. There's nobody that has a larger network than them. For the brand, we gave an average score because they do have a strong brand in the sense that everybody knows their products. Probably most people in the world know Facebook and Instagram. Most people probably also know WhatsApp. But not all of these people like the brand, so we gave it an average score. For experience, we also gave them the highest score because they pretty much invented social media, so there's nobody that has more experience in this segment than they have. So let's take a look at my outlook for Meta. Meta has more than 3.5 billion people in its ecosystem, which is just crazy to think about. They have many potentials that are still completely untapped, like WhatsApp or augmented reality. They are historically cheap right now at a PE of 17. They have big investments into their own future and into their different business segments. Hardly any other company, though, is criticized as frequently and as harshly as Facebook is. They also have no revenue sources besides advertising, at least none that are really contributing to the upper or lower line of the company. They also have a lot of competitors which are entering the space and expanding a lot faster than Facebook, like most prominently TikTok. And they are operating in a space which is changing rapidly. For example, a few years ago, video wasn't really as important in social media, and now pretty much everything on Instagram and TikTok is done via video. That being said, we do see an sustainable upside potential for Meta, but do keep in mind that there are a lot of risks right now. If you asked me like half a year ago when they still were called Facebook, I would have said it was a no-brainer investment pretty much for me. But now with all the new risks from the overall competitive space and the whole transition to a metaverse company, in my opinion it adds a lot of risk, especially the metaverse part, because right now it's just an idea and nobody really knows how it will eventually look like. And also, I think that the whole decentralized space is more suited for cryptocurrencies, which Facebook abandoned with their whole DM project, which they sold. So I don't know. It's hard to judge, and I personally do not hold a position in Meta anymore. I was invested in Facebook, but sold around 1 month after they rebranded to Meta and laid out their whole plan to grow into a Metaverse company in the future. So I hope you liked this video and could learn something new. If you did, please consider subscribing, liking the video, and commenting down below how you like the analysis, how you in general like the stock and the company, and if you own it. So I hope to see you again and have a nice rest of the day. See ya.